today's video, we are going to be talking about the repo rate versus the bank rate. What happens when there is a repo rate cut or there's an increase in the repo rate? What does it mean to you and what does it mean to me? I will explain the terms separately. I'll show the relationship and then what happens when there's movement. And in this video as well, I will give you a live demonstration using a bond calculator for particularly the property investors or the aspiring property investors on how they could utilize the low repo rate right now to maximize their property investing returns. Welcome to my channel. My name is Genevieve Stafford-Jack. And just a quick disclaimer, my video does not constitute to any financial advice. Everything that I have compiled together in this video has been thoroughly researched by myself, and I also have sources of where I've got the information from, and I've put it down in the description below. And if you like that, I would like you to hit on the like button, and here we go. We'll get straight into what the repo rate is versus what the bank rate is. So the repo rate versus the prime rate, which is the bank rate. So what is the repo rate? The repo rate, which is the repurchase rate, is the rate at which the South African Reserve Bank, which is SARB, lends money to commercial banks. Commercial banks are banks like FNB, Nedbank, Standard Bank, Capitec, ABSA, just to name a few that we are used to and something that we would recognize. The commercial banks, what they do is they lend money to the public, and the public is you and I, right? How do they lend us money? In the form of a mortgage, which is a bond, a car loan, a personal loan, and other different types of loan products made by the bank. When the commercial banks lend money to the public, there is a certain rate, which is a base rate, at which they lend the money, and that is called the prime rate. Oftentimes it's called the bank rate. So what is the prime rate? The prime rate is the benchmark that the banks use for setting interest rates when lending money to their clients, such as yourself and I. However, this particular base rate is also the same rate that the bank uses when we are investing in a 32-day notice account or in a savings account, wherever we are finding that there is a bank investment product. You may hear some people say, you know what, I got a good interest rate from Bank X and they have given me prime -1. Now there's something you need to know about the prime rate. The prime rate is when the bank gives you something at prime rate, you must know that your credit record, your scoring and everything is top notch. The bank doesn't just give you at prime rates. Now, if somebody goes in and they say, I've got something at prime -1, well, they certainly are shooting the stars right out of the sky. The repo rate and the prime rate have a direct relationship. So when the repo rate goes up, the prime rate goes up. When the repo rate goes down, the prime rate goes down. So they follow each other. Technically, the prime rate follows the repo rate. So you can look at the repo rate as the leader of the pack. And there's something that I need you to keep in mind is that typically the prime rate is 3% higher than the repo rate. So just keep that one in mind. So SARB lends money to the commercial banks at 3%, for example, and then the commercial banks will then lend money to the public, which is you and I, plus 3%, if not more, depending on your risk profile at the said bank. Now, who sets the repo rate and what is its role? We're getting somewhere here, right, guys? If you like this, I'd like you to smash on the like button. So who sets the repo rate? The South African Reserve Bank sets the repo rate. Why would they do this? They do it in order to stabilize the economy as well as the currency. What is the role of the repo rate? If the repo rate is high, it is expensive to borrow money, right? But if the repo rate is low, then it means that it's cheap to borrow money. And here's a fact that we have just been living through, right? This is what we have witnessed during COVID-19 pandemic, because between April and September 2020, the repo rate has dropped from 5.25 to 3.5%. You will find the link to the data that I'm talking about with the South African interest rate down in the description below. And also, if you have to go into that particular website, you are going to find, according to that particular said calendar, we are set to hear from the South African Reserve Bank Governor on the 19th of November 2020. This is why I like research, so that we can point you in that direction when we are sharing and teaching about why we look at all of these things and what does it actually mean in the grand scheme of life. How do these rates affect us as clients? You see, if we've got a loan at the bank, mortgage, car loan, whichever loan we've got at the bank, there's two ways we can get these particular loans. We could get it on a fixed rate, or we could get it on a prime linked rate. Sometimes people will call it a variable rate. Now, on this variable rate, it just means that it moves. The fixed rate it's going nowhere type vibe. If you, as a consumer, and I have got a loan at the bank and it's on a fixed interest rate, then that means when the repo rate is moving, whether it goes up or whether it goes down, it does not affect the terms and conditions that we've got around our loan repayments at the bank. However, if you have got a prime linked loan, you definitely are affected, right? Which is that variable loan that I was talking about. When the repo rate changes, guess what? You're sitting and you're saying, oh, okay, so now the repo rate changes, and then what? An interest rate cut means that you will pay a lower interest rate on the money that you owe to the bank. However, when the repo rate goes up, an interest rate hike means that you will pay a higher interest rate on the money that you owe to the bank. And this is how it affects us. The higher it goes, the more expensive it becomes. The lower it goes, the more cheaper the money actually is. This is South Africa's Reserve Bank, Lesetja Kganyago. I know some of you may kill me for butchering his name. I'm trying out in here, right? This is what he had said. He had said, this is the lowest repo rate since the system was introduced in 1998. So this Governor Lesetja, unpacks the MPC decision to retain the monetary policy rate at 3.5%. He did this just last week, and how the South African Reserve Bank COVID-19 stimulus measures take hold. And again, in the description, you will find his full speech, that actual link to the YouTube video where he gives his full speech. But what I really wanted to draw to your attention right now is that the repo rate falls to 3.5%. It's lowest since 1998. Now, let's quickly switch over to Google. And we're going to type out, what is the average salary in South Africa? Because I really want to work on something practical to actually show you what I find very, very fascinating about the repo rate cuts that has transpired within this here. So the average salary or the average wage for a worker in South Africa is 22,500 per month. Okay. So now I want us to keep this 22,500 in mind. Now we're going to move over to a bond calculator. So just now, what did we see is the gross monthly income of an average South African is 22,500 Rand. Now, on a hypothetical situation, I played around on a couple of income tax calculators just so I could get it really, really close to something. So I'm going to round it off to 19,000 Rand. Say, for example, your gross income is 22,500 Rand and you leave the workplace with 19,000 Rand in your bank account. If on, again, a hypothetical situation, your monthly expenses are right now sitting at, let's say, 13,500 Rand. What happens is, over 20 years, if I go and get a bond with the interest rates of 7%, because that's by default put into these online calculators, if I say calculate, so it shows me what I qualify for, which is a little over 700,000, okay? Because my monthly repayments are then 5,500. Please note, on all of these websites that we use, there's terms and conditions that apply to that particular organization, all right? So in this is a hypothetical situation. Now, this is where it gets very interesting. You know, oftentimes we wait so that we can get a bonus at work, or we go into the next tax bracket to be able to qualify for a lot more money, right? Now, this is what's interesting about right now where we are. Where we are right now, it is not quite normal, so to speak, that we are qualifying for such a huge amount of money. Because just a couple of months ago, when the interest rate was 10%, with the same salary, the same take home, we qualified for a lot less. We qualified for almost 570,000 Rand. But just because the repo rate was cut, obviously the prime rate was then affected. Now, if we go back to, now keep this in mind again, right? Time back, if the interest rate was sitting at 10%, it's been cut a number of different times, right? Now we move it back to 7% and we recalculate. Suddenly there's this huge jump. There's this jump of almost 140,000, and you did not qualify. You did not go through an increase at work. All what happened is the repo rate changed, therefore it changed your standing. What I want you to keep in mind, when you are doing your calculations from a property investing point of view, instead of putting it against 7%, put it against 10%, because you know what, it will hold you in good stead to create this breathing room so that you're not feeling like, oh my gosh, when it's 10%, it's going to be game over for you, right? And if you're interested in learning more on how to run your numbers with using a deal calculator, I will stick up on here a reference point of a video that I had done live last week. So have a look at that video and see how you run the numbers. And in that video too, I played with the interest rate and said, we need to work out some of these affordabilities so that when the repo rate does increase, because the economy has been well stimulated, where will you find yourself?